All right, guys, so as the cost of borrowing goes up because of interest rates, more and more people are tapping into the equity of their homes. Home equity lines of credit, or what are otherwise known as HELOCs, were used to borrow $66 billion by Americans in the second quarter of just 2022, which is an increase of over 40% when compared to the same time last year. Now, these accounts, which let homeowners borrow against the value of their homes, are making a comeback because higher interest rates make it less attractive to refinance your existing first mortgage. Now, those who have been longtime viewers of this channel are going to know that we love home equity lines of credit here. And that's for many reasons, but not necessarily for the reasons that they're being taken out at record numbers. A home equity line of credit works like a credit card, but because it's backed by your home, the interest rate is usually much better. Bankrate.com says that the average home equity line of credit rate is 7.7%, while the average APR on a credit card is 19.04%, and the average personal loan is 10.64%. Just in comparing the interest rates of those three types of debt weapon accounts shows you how beneficial home equity lines of credit can be as a financial tool. Owners get a credit line based on the value of their home, but they don't have to use all or even any of the money if they choose not to. And that's another attractive part to home equity lines of credit. The easy access to money that HELOCs offer can be especially appealing when the economy is unstable, as long as borrowers don't use their home like an ATM. When the economy right now is bad, lenders tend to tighten their credit requirements. So if you think you might need the money later, you might want to apply for a home equity line of credit right now. We love to use home equity lines of credit for investment purposes, as well as to accelerate paying off higher interest debts. Take a look at some of the videos that I'm going to link in the description below to learn more about the best strategies for home equity lines of credit. Unfortunately, the recent rise in new HELOC accounts isn't happening for these strategies. Ryan Leahy, a regional president and senior loan officer over at Hometown Lenders of Texas, said that clients are saying that they want a safety net as credit card bills rise along with unemployment fears. HELOCs can give homeowners a financial safety net as well, but they need to know exactly what they're getting into. If somebody doesn't pay back the HELOC, they could actually lose their home. Rick Sharga, who's an executive vice president of market intelligence at Adam, said that because of the risks, some of the bigger banks are choosing not to offer HELOCs at all, despite the fact that the number of people who want them is growing. Instead, he said that most people who need HELOCs are being forced to go to credit unions and local banks. Since the pandemic, big banks like Wells Fargo, JP Morgan Chase Bank, they haven't started giving out new HELOCs again. Citibank also stopped offering HELOCs for now. Bank of America is still giving out HELOCs, but it is becoming more and more difficult to be approved for them. To get a HELOC, your home's current value needs to be at least 15% higher than what you owe on the mortgage, but each lender might have a few different rules and terms, as with any type of financing that you're going to be applying for. A borrower might be able to get a HELOC for about $90,000 on a $400,000 home, which has a $250,000 mortgage balance. Most of the time, the interest rates on HELOCs are variable, which means that they change as interest rates change in general. Your credit score, the amount that you want to borrow, and the amount of the debt that you also have will affect the rates and the terms. HELOC applications generally also come with fees that will vary by lender. These fees may include the cost of the home appraisal, which are obviously higher at this point, as well as a title search. It can also come with other costs that can add up to between 2% and 5% of the total credit line. The interest rate that you pay on a HELOC can be deducted from your taxes, but only if you use the HELOC to pay for home renovations as well as any other improvements you're making to the home. Now, you can only deduct interest on up to $750,000 of home debt. This limit includes how much you owe on a home equity line of credit and other home loans like your first mortgage. One of the most common ways to use a home equity line of credit is to pay for home improvement projects, which can also increase the value of your home. With both home prices and mortgage rates being high, many Americans would rather fix up their homes than move. Due to the product's variable interest rate, you should try to only carry a home equity line of credit balance for a short period of time, usually between 18 to 24 months. For anybody who's thinking about getting a HELOC, it is critical to know the best ways to use it, and it's just as critical to avoid the worst ways. We would never, for example, recommend using a HELOC for any large consumer-based expenses like a wedding or a vacation or even a vehicle. Using a HELOC on a home improvement project is something that can be a good idea, but it's best to see which areas will give you the most bang for your buck and probably hold off until we know a little bit more about the volatile economy. A kitchen for example, tends to bring the most lasting return on investment when it comes to home improvement projects, while finishing a basement or an attic can bring a decent return as well. Now, that being said, HELOCs can bring a higher return on investment when you use to accelerate the elimination of your debts too. You could save yourself tens to even hundreds of thousands of dollars pairing a HELOC with solid debt elimination strategies, so be sure to check out the description for videos on that. Another amazing use for HELOCs may be coming up soon. It's difficult to predict what will happen in the housing market, but if it goes the way that it's looking it could go, then some amazing deals could certainly be around the corner, and you can use home equity lines of credit as an eligible form of 20% down payments. The number of millionaires is expected to double in the next few years, folks, and the proper use of a debt weapon like a HELOC may be the jet fuel that you need to get there. Lastly, HELOCs can provide additional peace of mind as an added layer of protection beyond a traditional emergency fund. Just be sure you aren't too reliant on your emergency funds when unnecessary. Getting your finances in order really is an effective way to make sure that you won't be too reliant on your emergency funds. We offer a free tool. It's called the Cash Flow Cruncher, and that's given to everybody here on the channel, and it'll make this process simple. You can head over to cashflowcruncher.com to get your free version of that Cash Flow Cruncher spreadsheet. It comes with no strings attached. Everybody loves it. We do hope that you enjoyed today's video. Be sure to get out there and explore a home equity line of credit for yourself. Also, please be sure to subscribe, like this video if you don't mind. It certainly helps us a lot with the YouTube algorithm, and share it with anybody else that could use it. Until we see you on the next one, make it a great day today. Happy holidays, and don't forget, keep on cash flowing. Take care.